Well, Canadian fertilizer giant Nutrien has reported results and has missed expectations. It cited weakness in potash prices and weather disruptions as well. However, our next guest is an analyst who covers the stock. He says that the latter half of the year may be more important for Nutrien's results. Let's bring in Seth Goldstein. He's an analyst at Morningstar. Seth, thanks a lot for joining us. What's your take on Nutrien's numbers?
Well, we saw the retail business get off to a very slow start for the year, but when I'm analyzing the retail business, I really like to look at the first half of the year, and that's because variable weather, particularly in the key U.S. and Canadian markets, can really affect farmer planting decisions, and that affects when they purchase crop inputs, key inputs like seeds, crop protection chemicals, and fertilizers. And so there was some harsher winter weather or a delayed start to the year, to the spring planting season, which likely means a lot of sales got pushed from the first quarter into the second quarter. And I expect the second quarter will see a much improved result for Nutrien. And so we'll end up with the first half of the year in a very similar place as we were last year. But clearly with the first quarter miss, the stock is reacting to the poor results today.
How should investors think about Nutrien, the fertilizer industry, and weather? Longer term, surely weather patterns are going to flatten out, and it'll be more or less consistent. Each year, more or less, is the same, absent unusual variations in seasonal weather. So you've told us that a weakness in weather-derived weakness in the first half of the year is likely to be made up in the second half of the year. How should investors think about the variability of weather on Nutrien's results?
Well, in the near term, it can certainly affect quarter to quarter. And if weather is extreme enough and farmers can't plant, like what we saw in the U.S. in, say, 2019, when we had the lowest number of planted acres in over the last decade, that would be a near-term impact. But generally, when you see weather for a company like Nutrien, it might be a quarter or so delay in farmer planting and purchasing decisions. But if you look over a longer-term period, the better dynamics for Nutrien tend to be growing global demand for potash, and variable weather for potash is really a key long-term driver, because putting more potash down the ground for farmers means that the crops will still grow just fine to the same yields in a wider range of either drought or wetter weather circumstances. So this is a global potash demand growth that's a multi-year tailwind that should benefit the low-cost producer like Nutrien, because they're one of the lowest cost potash producers globally. And so to meet increased demand, we're going to need to see higher cost supply, which over the long term should drive prices higher and drive Nutrien's profits and free cash flow higher as well.
On the conference call today, Ken Seitz, the CEO, took a question from an analyst on where the Brazil business stands recently. How big is the Brazil market for Nutrien? What have been the challenges there recently?
Well, for Nutrien, the Brazil market has been a smaller part of their retail business, but it's a growing part of their potash business. Nutrien and really Canpotex, the Nutrien Mosaic export joint venture, is moving away from the traditional selling a lot of potash to India and China and selling more to markets like Brazil. So that's becoming a more important fertilizer market for Nutrien over time. When you look at Brazil, we saw what should be a good planting season, but over the past couple of years in the retail business, they've gone through a big inventory destocking, especially for products like crop chemicals. So that's led to a little bit of lower results temporarily, but over the long term, as inventory normalizes, we still think Brazil is going to be a growing market for agriculture inputs, and that's going to be a good market for Nutrien over the next several years.
How much do we know about tariffs around the world and how they could affect the flow of fertilizer?
Well, if anything, tariffs are going to raise prices for farmers. Now, for potash coming into the U.S. from Canada, most of that, if not all of it, is USMCA compliant, so that should have no tariffs. But if you're looking at especially nitrogen and phosphate coming in from other regions, such as, say, Trinidad, where Nutrien does export some nitrogen to the U.S., that would be subject to a 10% tariff. But When we're looking at the market, we've seen prices go up, and so generally the farmer just has to pay up for the increased tariff costs. And so for Nutrien, they really shouldn't see an effect on their volumes. They really shouldn't see an effect on their unit costs or profitability, and so it really should just be largely a pass through for them.
Your target on the stock is, it translates to $99 Canadian. I think you express your price targets primarily in US dollars. My understanding is your US dollar price target is 70 US dollars. There's a look at the US listing. The stock now trading at $54.13. Your target is 70 US. How do you get to that target?
Well, we think as Nutrien restores their retail profits over time, as we move past the destocking event and we see more normal demand, and then we think as fertilizer prices recover, we point to rising potash prices this year and potash prices remaining higher above the cyclical lows of 2024. We think that will be a big benefit to Nutrien's profits. And as Nutrien starts to deliver higher profit growth throughout this year, we think the market will come around to the fundamentals. Remember, Nutrien only recently, the past year or so, stopped guiding to company-wide guidance. And this means that when you see a lower earnings like today, the stock might react a little more volatile in the short term. However, over the long term, we think as potash prices rise, Nutrien's profits will be fully restored in that business. And with higher retail profits, we point to a good bullish outlook for the underlying business, which should send shares higher to our price target.
How competitive is the company with respect to peer companies, and how competitive is the industry?
Well, the industry is very competitive. When you're selling commodities, it's all about your cost position. And this benefits Nutrien. It underpins our narrow moat rating on the company. And is really driven by Nutrien has one of the lowest cost potash operations globally and has a very low cost nitrogen operation as well. These two businesses account for the majority of profits. And so this really drives Nutrien to be able to generate excess returns on invested capital and benefit from the low cost position.
Seth, thank you so much for your insight on a very high-profile Canadian stock. That's Seth Goldstein, an analyst at Morningstar.